Rolling back regulations often comes before a financial meltdown, according to 300 years of history. Interesting. The blame for financial meltdowns often focuses on irresponsible traders and greedy bankers, but politicians whose policies sometimes fan the flames deserve scrutiny as well, according to a fascinating analysis of booms and busts since the 18th century by Jihad Dagher, an economist at the IMF. All right, I'm not familiar with that economist, and I probably butchered that person's name. I apologize. Okay, the cycle of booms followed by deregulation, crises, and re-regulation has repeated itself over the past 300 or so years. This may sound familiar. All right, so here we go. Despite concerns about shaky companies, politicians weakened enforcements and regulations that were put in place after the previous financial crisis, the South Sea Bubble in 1720. By the end of 1825, markets were in a full-blown panic, according to Dagher's research. Stock and bond prices crashed, leading to bank runs and failures. A year later, nearly 10% of England's banks had collapsed, sparking perhaps the first major global banking crisis. Policymakers responded to the turmoil with a range of measures, including trying to shore up the banking system with great levels of capital. What ensued from the 1825 crisis was a series of law, regulations, and reforms that touched all aspects of the financial sector. May sound familiar since the U.S. just went through a similar cycle. Government policies had a role in that panic too. Fannie Mae and Freddie Mac, which purchased mortgage loans from originators, were given affordable housing mandate in 1992, driving them to buy lower quality subprime mortgages to make borrowing cheaper. Policies to make credit more widely available for home purchases, a push that spanned multiple administrations, were further ramped up during George W. Bush's presidency. The industry lobbied hard for changes. Then it all went wrong, as it did many times before. After a housing bubble burst and billions of taxpayer dollars were used to stem the collapse of U.S. financial institutions, politicians responded with the biggest overhaul of financial policy since the Great Depression. The Dodd-Frank Act of 2010 set out to wind down failing financial firms, tightened oversight on the sector, created a new agency for consumer finance laws, and introduced stronger capital requirements, among a raft of other measures. Okay. Since the 2008 collapse, the U.S. economy has dragged itself out of a mire and is growing steadily. Stock markets, meanwhile, are soaring so much that economists have warned they are overheating. The recently passed tax cut, meanwhile, gave those assets an extra boost. I don't necessarily know. I don't believe that's been confirmed. There's actually a lot of economists that said there's no reason for this tax bill to have gone through. A lot of economists said that there's absolutely no reason for that. We don't need that. In particularly when the stock market is where it is. Even more conservative-leaning economists have said that. So I don't know if I agree with that part of the article. Well, actually, I don't agree with that part of the article. I don't think the tax cut is just going to hurt the poorest among us and give a handout to the corporations who aren't going to reinvest that money. The corporations just aren't going to reinvest that money. So the tax cut is nothing more than a handout to the 1%. That's just definitionally what it is. So 3 centuries of history suggest that now could be a time to strengthen supervision rather than water it down. I would change the word supervision to protections. And yes, this is a time to strengthen protections. And this is something, this article brings up a good point that there is basically, if you really want to strip down the economics of banks go through periods where they loan too much, they overextend themselves, and the people suffer. And then they kind of rein it back in, and maybe they rein it in too much at times, and the people suffer. And it's just this ever-growing struggle to find a middle ground that's never going to happen because banks are all about just gobbling up other banks and are all about overextension. That's what they do. Banks are predatory institutions, and at least 90% of the time, and they're always going to overextend regardless of the consequence to the consumer, to the customer, and to the world at large. So yeah, and we have 300 years of history pointing to this stuff. The banks aren't the victims in this case. They're not. They could manage their resources while still lending. They choose not to every single time because their business model isn't built on that. Banks are built on we're going to keep buying other banks. And we're going to keep buying some of these banks that have drowned themselves. Banks that have failed are bought by banks that have not failed. So what do the banks that have not failed take on? They take on those banks that have failed. And who do they try to squeeze the assets out of? The consumers that were likely victims to a predatory loan scheme. So yeah, and that's how our markets come and go. And so now is definitely a time, considering what happened with all the deregulation of banks, a lot of it even during the Obama years. Now is a time to strengthen protections. And what do we get instead? We get a tax bill that's a handout to the 1%. So yeah, I mean, I don't agree with all the analysis in that article. I think it's an interesting perspective. But I do think that the theme of the article is right on, that, yeah, now is a time for strengthening protections, not loosening them. Hey guys, thanks for watching. That was a clip from Get Your News On with Ron, the world's first viewer-curated streaming news show. What does that mean? That means I log on to a stream and people tweet me articles over on Twitter at Ron Placone, or they use our Reddit subsection, which is just Get Your News On with Ron over on Reddit. And that's how we build the show. I'm seeing all these articles for the first time. We are literally getting our news on together. Follow me on Twitter at Ron Placone so you can participate. And this show streams live every Tuesday through Friday at 10 a.m. Pacific Standard Time. So please do tune in. If you want to support this show, you can do so over on patreon.com/Ron Placone, where for as low as $1 a month, you get access to exclusive podcasts every week, exclusive videos, free tickets to shows when I'm performing in your town, and more for as low as $1 a month. Please do consider it. Thank you so much for your support. This has been Get Your News On with Ron.